Since February of 2021, the majority of stocks in the stock market have been steadily heading lower. And as an investor, you're no doubt concerned. Like everyone, you're wondering, how low will it go? When will it finally bottom? What comes after it does bottom? And what should you do right now to prepare? I'm Bill Spencer. I'm the editor-in-chief at True Market Insiders, and I'm here in Fort Lauderdale, Florida, with Chris Rowe, the founder and CEO of True Market Insiders. And we're here today at Chris's home to answer those questions for you. So yeah, man, thanks for having me in your home. I really appreciate it.
Absolutely. You're welcome here anytime.
Yep, thanks. All right, so the stock market. Give us your view of what's happening now. Are we heading for a bottom? What do you expect?
Well, first of all, it's important to understand that there are two major bottoms that might happen. Two types of bottoms. One is a bottom that you might see within a long-term uptrend. That's most of the time what you'll see in this situation that we're in right now. Usually you'll see a market that gets washed out, oversold, and one of the best long-term buying opportunities that you can hope for, and the market continues higher after that. And everybody wishes that they had bought at that absolute bottom. Yeah. Everyone is, of course, afraid to buy at that bottom. The whole reason that stock prices are that low to begin with is because the most powerful Wall Street veterans in the world were shaken out of their positions. They've sold stock. That selling pressure pushes prices down to where they are right now. And at that point, short sellers cover. Bearish investors who were betting on the downside get out of their position. That buying pressure pushes stocks higher, and stocks tend to go higher for the next several months. Every now and then, and when you're in a position like this, the stock market starts out the same way, gets way oversold, and short sellers start covering, and Wall Street veterans get out. And again, you see a rally off of that low for a few months. But then the market continues lower into a deeper bear market. I'll give you a couple of examples. In 2007, the stock market topped out in July and then again in October.
2007.
Correct. Right before the 2008 massacre, basically.
Yeah.
So then in January of 2008, the market was way oversold. Short sellers started covering. Wall Street veterans were shaken out of their positions. And it seemed like a great buying opportunity. In fact, it was a great buying opportunity for the next few months. So you could have easily made, just by betting on general stock market averages, 15, 20% in just a few months if you would have bought off that low. But of course, we know what happened after that. In 2008, the stock market continued to make lower highs, lower lows, ultimately crashing. Another example, obviously very unfortunately, is 9/11. 9/11, we were coming off of the tech boom high. The stock market sold off after the 2000 high, sold off, and going into September, we were already kind of in a bearish market. People were wondering if the market was going to bottom out or keep going lower, very similar to where we are today. And we were attacked, and of course the market bottomed out. Still, it was a great buying opportunity, even though it was a low within a long-term downtrend. That low could have returned you, just betting on general market averages, 20, 25% return just by buying at that low within a long-term downtrend.
Buying the S&P, buying the market, buying the down. Yeah.
And you could have bought, if you bought the right sector, you could have made 50 or 100% return. But just buying the general market, you could have made a significant amount buying that low, continued higher for months after. So that's what you see sometimes, but most of the time you see a dip within a long-term uptrend. So the question is, which one of those are we in right now? What do I think is going to happen? Well, we're in a midterm election year right now. And while we are at a low point in the market, we might go a little bit lower. Midterm year is the weakest year out of the 4-year presidential election cycle. So for folks who don't know this, if you think about the market in terms of cycles, one of the most famous stock market cycle is the presidential election cycle. Think of it as 4 years. Of course, every 2 years we have midterm elections. But think of it as 4 years where you have the election year, the post-election year, the midterm year, and then the pre-election year. And then, of course,
and right now we're in the midterm election year. Yeah.
Right. This could be a market top. This could be a long-term top. It's long-term tops are the hardest part of the cycle to call. So there's 4 stages to the stock market cycle. There's the advancing, the topping, the declining, and the bottoming for the layperson.
And just to be clear for people at home, when you say market cycle, that's different from the presidential election cycle that you were talking about earlier. This is a
right. If you were to just look at a long-term chart of the stock market over the course of maybe 20 years, you would see there's the advancing, the topping, the declining, and then the bottoming stage. I just want everybody to know what institutions on Wall Street call this. And again, I was money manager on Wall Street for a decade. I haven't been a money manager since '95. This is offensive. Institutional investors on Wall Street call the bottoming stage after a bear market the basing stage, okay, and they call it the accumulation stage. So they're accumulating stocks while everybody else is selling.
Yeah.
And the advancing stage is referred to as the markup stage. They're marking up prices. They've basically bought most of their positions, and the rest of the buying that they're doing is basically pushing the market higher. It's one of the reasons they're doing it is to push prices higher. The topping stage, so the layperson topping, is called the distribution stage. Think about that. Yeah. The topping stage is called the distribution stage, and it often takes months and sometimes years to distribute these large positions that they have. They have so much stock. And of course, the declining stage, they call it the markdown stage. I'm seeing lots of long-term bearish signals right now. We're seeing lots of things that happen near a stock market top in a maturing market. It's a textbook scenario, basically. Also, you tend to see lots of gains concentrated in one or maybe two sectors. You're seeing the ugliest New York Stock Exchange BPI chart that I've ever seen since getting into the market in '95. Yeah. And I can't even remember. I mean, I've studied it going back another 100 years, and I can't remember.
Yeah, we're just seeing one lower high and one lower low after another. We've been seeing that since February of last year.
Yeah. So this is what I think, okay? Because we are in an interesting position because the midterm year in a presidential election cycle is the weakest year by far, and the following year is the strongest year by far. So if this low point that we're seeing right now actually is a low point within a much bigger uptrend, it's the perfect buying opportunity for long-term positions. While everybody else is investing in Microsoft and getting 24% or 55%, the elite do it in a specific way where they're making thousands of percentage points. The story doesn't get told, and I'm going to reveal the story today on how this is done.